Welcome back. It's time now for Past Picks. Andrew Moff visited with us on September the 27th, 2023. So just over a month ago, about 13 months ago, just over a year ago, I should say, 13 months ago. Dream Industrial REIT was a top pick on that day. DRI in Toronto, DRI.UN. There you see the numbers, a total return, which of course includes the distributions to unit holders of 10% over that period of time. Andrew.
Yeah, so Dream Industrial REIT, a name we continue to own in the fund. We actually think this is probably one of the most attractive industrial warehouse plays globally. So the previous caller was asking about Granite. We have more of our portfolio in Dream Industrial today. Why is that? It trades at such an attractive valuation. We think it's about 25 to 30% undervalued, meaning the gap between the public market price and the private market value of its assets. It's got a great portfolio. Think of it as more of last mile distribution. That's more attractive to us today. Some of the smaller bay units, we call it, that are close to population that can fulfill the delivery of goods. And it's a portfolio in Canada as well as Europe. Europe, we see some very positive fundamentals in the Netherlands and in Germany specifically. And in Canada, they have one of the best exposures to Toronto that you can find in the public markets. So we would continue to stay the course here. We have continued to add to it on weakness, sell it on strength. Okay.
The next top pick on that day was Sun Communities. This is a New York listed security, SUI in New York. There you see the numbers, a total return over that period of time, 17%. Andrew?
So Sun Communities operates in a sector that we really like, the manufactured housing community sector. Think trailer parks. This is a real estate sector whereby the landlord owns the land, you own the home that sits on top of it and pay land rent. The resident is responsible for all the capital expenditures and has to pay rent to the property owner. Very pure form of cash flow in property, and hence the appeal. This is a sector, as a result, that's always traded at a premium to net asset value, and there's only been very few times where it's traded at a discount, and today is one of them. We recommended Sun Communities over a year ago, and we continue to own it in the fund today. It still trades at a discount to its net asset value, and what we find perplexing is that it trades like an apartment REIT, yet is way more defensive given the attributes I just described. Think of this as a form of affordable housing in the United States, yet it has better cash flow growth next year. So we continue to stay the course here in Sun Communities. We've been pleased with the return so far, but think the setup could be good for 2025.
Okay, and a final pick on that day, top pick number 3 on that day, Boardwalk REIT, a name familiar to Canadian investors. It's been in the rental housing space for many years in this country, and there you see the 13-month return on that one, 14%. Andrew?
Yeah, and Boardwalk's been a favorite name for us in our fund for many years as well. We noticed the recovery in Alberta, I think, earlier than others, probably even surprised management, where we thought what our values of the stock could be. And even still today, with the stock now coming off its recent highs of 90, where we told management we thought the stock could go to, 3-4 years ago. Sitting here today, what's interesting is here you have the opportunity to buy a great portfolio of apartment assets weighted to Western Canada, specifically in Alberta and Saskatchewan, where there currently is no rent control. And you can buy a portfolio trading at, call it $210,000 a suite. Comparable assets in the private market are trading anywhere between $230,000 and $260,000 a suite. That's the easy math for us. You're buying it near 20% discounts at a time where cash flow growth is growing in a compelling way. So we continue to own Boardwalk. We understand why it's pulled back recently with concerns over population growth next year in Canada, but we remind people, given interprovincial migration, Alberta continues to look like a winner as a place where people can find affordable housing.
Those are Andrew Moff's past picks, all of them finishing the 13-month stretch between appearances in positive territory. There's a total return over that period of time of 14%. We'll be back with Andrew Moff from Vision Capital. He'll resume taking your questions on real estate stocks right after this.